The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray, feeling good, Lewis. We'll have Rich Anderson as our guest at the break. We'll start like we always do with the DAX index. As you can see from the 15-minute chart that we've completed this pattern. This was as of 3 o'clock this morning, and it's, of course, rolled over since that time. If we take a look at this daily chart on the DAX, you'll notice that it was completing a nice ABCD pattern up here, too. So whether it's going to turn or not, I'm not sure. However, we do have some information from our good friend Norm Winsky, and he's basically told us that the market is certainly looking like it's ready to go down due to this Jupiter aspect that he has. It's a special aspect because he sent out a special notice on it, and I thought I'd share it with you. If we take a look here at the FTSE, we're looking at the same thing here. The FTSE did go above the, hold it, let's put this up here. We did go above the 61% retracement by just a little bit, and then we've rolled over again. So whether that's going to turn down or not, you know, we'll have to wait and see. We're just looking at these patterns because sometimes they work and sometimes they don't. And I think now would be the good time to show the don't, because this is one that I really focused on last week. This is the chart of Facebook. It started out beautifully. It went exactly to the number we wanted to sell it at, which was $75 a share. It immediately dropped down to $69 a share. And then the next day, of course, it gapped up to that same level again, and it ended up, you know, with a $2 loss. It was a perfect pattern, folks. It had the 135 just lined up absolutely perfectly. You had a beautiful Gartley. You just can't get any many. You had a perfect ABCD, 61% of the all-time high, 78.6% of the previous high, which was 0.3, and you had a 135 pattern of lower tops. But the problem is, only worked for 2 days, and this is why you have to protect yourself against yourself, because believe me, when these things break, they can go a lot higher. And of course, we're up near the 184 level now in Facebook. So this is what stops are there for. I had a really interesting email from one of our students from about a year ago. He was new to trading. He wanted to get into something different, and he started out with gangbusters, and he's done extremely well. But he's run into a problem. He's got some things that are actually causing him problems, and I think we'll all learn from this. I'll post this so you can see. These are the things that he needs to remove from his trading. One is to stop using high leverage risk. Now remember, he's making money consistently every month, and yet he's still making these same errors. Number two, my goodness, I don't think I've ever done this one, stupid trades based on intuition or boredom. That only happens about 3 times a day. Number three is the most important of all, in my opinion, and that is too much screen time, because if you sit there, you're going to find something to do, and if you haven't planned ahead, you're just rolling dice, and it's really nice. It's not nice to do that. And number four really takes care of 1, 2, and 3, and that is reluctance to follow rules. If you fail to have a plan, you're going to plan to fail. So just keep in mind that these are the things that you have to do when you're doing this. What I try to do is I try not to trade more than 3 things at any one time during the day. I frankly have a hard time focusing on any more than that. Usually the less things that I trade, you know, the better off that I am. But, you know, that's just neither here nor there. But keep in mind, these patterns do fail, folks, and you know, you got to watch it. Sometimes they work pretty good. We've got one here that is really moving. This was as of yesterday, and it's down another 130 pips today. That is this Canadian dollar. We're all the way down into the, we hit the 27.50 level already this morning, so that's made 3 times the risk involved in this. So if you're in that trade, make sure, you know, that you put your stop at break even or take some off the board, you know, just to be safe. We have another one that is actually doing pretty good. I'm going to bring up the chart of the silver and gold together here, because we've been talking about this over the last few days of the relationship between the euro and the gold, how it had been shifting a little bit, where gold had been a little stronger than the euro. And as you can see here, between the gold and the silver, and this is late, folks. I mean, this has already gone a lot higher. I did this about 2 hours ago, and we've gone sharply higher from that level, because we were buying that gold down around the 13 level, and we're sharply higher than that now. So that's the first price objective in the gold. So what you would be doing here is you'd certainly want to be taking some off, at least a few dollars, and then putting your stop at break even to see if it's got that potential, to do something bigger, because this gold chart longer term just looks extremely bullish, folks. I could be really wrong, but longer term, it just really looks very, very interesting. All we need is a move above the 13.40 an ounce would tell us that would be looking at something I think would be a lot higher on a longer term basis. We got some of these other. Thanks, Mr. Z. Throw me a life raft. No, I didn't say take off longs now. All I said is to make sure that you put your stop in, so that you guarantee that you don't lose anything on the trade. I mean, you're risking $5. Now you've got a $12 profit. Why are you going to risk the whole $12? So that's it. Anyway, so you have to. I don't know why you can't send private messages anymore, Maria. Maybe that's because you shouldn't. Everybody wants to know what you're doing, so just keep them coming. You don't have to send private messages. And now we want to know is who's getting the private messages. Aha! It certainly is not LP, I can tell you that. All right, let's take a look at Bitcoin, because we're starting to get some, we got down to that 9,000 yesterday. And then this morning, you can see here that Bitcoin has already jumped back above the 9,300 level. And this is getting to look very bullish, folks. Look at this over the past 12 trading days. This has been in a very, very tight trading range. That's different than the down move that we've had, during March. So this market is beginning to start to turn up, and that's it. Very good. Thank you for the private message. You guys are on a roll today. That's good. Anyway, the Bitcoin is moving, but we'll see whether it's going to continue or not. We're not involved with that, of course, but we do watch it for the other folks that are keeping an eye on it. Let's just get up here. I wanted to show you the chart here on the NASDAQ. In fact, Steve Rhodes was talking a little bit about the NASDAQ. I think we're looking at something pretty close to the same thing here. If you look at that move between April that we had in April, how it took out the previous highs at the 61% retracement and then corrected to 78% correction. We're having that same type of a move today. We just made that 1.618 expansion up there at 69.22. So whether that's going to mean very much or not, we'll have to wait and see. But just keep an eye on that, because it's got an interesting pattern here, and the whole world is bullish now. And they're right to be, because the market's been very, very strong. So we'll take a little break here. 877-927-6648.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
Are you an options trader that's looking for that extra edge when placing trades? David White will be hosting a webinar on May 16th, which is the Wednesday leading up to options expiration Friday in May, where he'll discuss in depth the methodology he uses for trading options near expiration, including swing trading setups and expiration day trading scenarios. Subscribers to each of Dave's newsletters, Path of Least Resistance and the Technology Insider, gain access to this 60-minute webinar, which will be archived if you cannot attend live. Dave has had some great option trades recently for his subscribers. See for yourself the trading methodology he uses when trading options by signing up today for either of his newsletters, and we'll see you Wednesday, May 16th at 5 p.m. for option trading near expiration, analyzing swing trades and expiration day scenarios. For all the details and to sign up today, visit the front page of TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Thinkorswim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, we're back, folks, and we have a caller from Philadelphia, one of our favorite people, Mr. Z. John, how are you, dear? How you doing?
The hearing from Norm. Larry, I've got a question here. I wanted to ask if you could pull up and gaze at a picture that I posted in Tiger TV of the Tiger's Den.
Yes.
I admire so much in your ability to ignore the news and trade the patterns alone.
Yeah, I try.
A great example of that was shorting the Canadian dollar on Monday up at 130, wherever that was, and you've got a fabulous gain on that. So here's my question. If you could gaze at the chart I posted on Tiger TV, and you will see just a price pattern with price bars and fib retracement levels in it. And I'm not even going to mention what this is, but we can both observe that this price pattern has rallied off lows and has gotten up to multiple highs at 325-ish, which is an exact fib 618 retracement. My question, Larry, if you look at this chart, when you look at that pattern, do you buy it? Do you sell it? Do you do nothing, given that pattern, please? That's the question.
The answer is yes, yes, and no. John, let's just walk through it. You've got a beautiful head and shoulders pattern. It's a 50% retracement on the right shoulder. You're going back up against a 61% retracement. You cannot be short above 33. Above 33, you have to be long because the ABC structure on that takes you all the way up to 39. So it's a bullish chart. I'd rather be long than short. That's what I'm seeing, but that is a very, very bullish chart. We had a Gartley there at the 26.5 level. That was right at a 50% retracement, and it's already above the 78% retracement of the last swings by far. So, if you wanted to short it here, your risk is at 32.75, and above 32.75, you don't want to be short. That's what it looks like from the cheap seats here in Tucson.
Yeah, no, that's terrific. I appreciate that line of reasoning. I understand where you'd stop yourself out if you shorted it. Question, is it a buy right here, expecting it blows past that 325 area?
Yeah, you could certainly buy it here because there are three things that you could do to buy it. One, first of all, you're not giving up a lot. The low was at 29.5. You could put your stop probably at 30.5. So you're risking at the very most $1.50, which is 3%. So yeah, I would certainly, there's no reason not to buy it. I mean, it's in an uptrend on a shorter basis. It's above the 78% level and doesn't look bearish. That's for sure. I'd rather be long than short.
Well, thank you so much on that. I'll reveal the mystery. This chart is 6 years' worth of weekly bars on the yield, the interest rate on the 30-year U.S. Treasury bond. Mm-hmm. So buying that instrument here right now, as you describe, is the exact idea of shorting the ZBM contract right here, right now. So terrific. I appreciate that walkthrough. That's terrific. Helps me out.
John, I love you, buddy. Thanks a lot. I'm glad it was something that I'm short because I was afraid. But anyway, the bonds and notes look very. In fact, I'll post that while we're charting here. I'll just bring it up here because we stopped right at this 61% retracement yesterday in this bonds, right at this 142.19. We got up to 143 and change. But gee, this chart is so bearish longer term, John. I just don't see how interest rates are going to drop from this level. These charts are just extremely bearish. So, the problem is it has nothing to do with fundamentals. These are just little scratches on a piece of paper called bar charts. So it sure looks bearish to me. That's all I can say.
Very good, Larry. Just trying to help. Thanks so much.
Hey, thank you very much. I really appreciate it, John. Thanks for calling in, my friend. We'll have Rich Anderson here at the break. We want to get into to moving. We've got a little chatter here going on about the crude oil because of what happened last night. I have to tell the story about this one, folks, because it's something that we have to pay attention to. Here's the thing that I sent out last night. I sent this out at 4 o'clock in the afternoon, and I had no idea what was going on. Honest to goodness, I really didn't. When I put this out, it was trading at around 71 and change. And the next thing I knew, and I'm telling you, within 1 minute, the Israeli and Syrian rockets started going, and crude oil rallied about $1 a barrel, went right up to the exact price. To the tick. It went actually 2 ticks above the sell price and then stopped, and then it was only reversed about 90 cents so far today. But the fact that it's in the middle of a potential war with Israel and the darn thing didn't go down, I thought was totally surprising. Well, what was so funny is about 30 minutes after I had sent this, I got the very first phone call from one of the subscribers for 24/7. They always email. They hardly, no one ever, well, they do call once in a while, but the fellow called and said, "Oh, I'm scared to death." And I said, "Well, did you get filled?" And I said, "Yes." And I said, "Do you have a profit?" And he said, "Yes." And I said, "Put your stop at break even and forget about it." I said, "I don't know what's going to happen." And I didn't. And of course, it sold off. I don't know if it's still going to happen. But, the fact that the news was supposed to be really, really bullish on crude oil, given the fact that we've got this, Iranian thing looming over our heads. And now we've got a potential Syrian, Iran, Israel thing going on. And yet the market didn't rally very much. That's a big thing. It reminds me of one of the biggest moves I ever had in gold back in those old days when the news was running around. But folks, the news is not always your friend. So try not to watch that monitor very much if you can, because it can really be a really bad thing. So we'll see. Anyway, I don't know what's going to happen to it either, but nobody else does either. All I know is that's a completed pattern up there. It's got time, price, ratios, all the stuff that we look at. Sometimes it works, sometimes it doesn't. Remember, the Facebook one didn't work. The others. The other one that's having a little trouble here is the sugar that we talked about. It's underwater about 20 cents, which is a couple $100. But you keep your stop working on that another 20 cents lower, because if it makes new lows, this pattern would have certainly failed, and you don't want to stand in front of those. Here's this Canadian dollar this morning. I'll bring this up to you. You can see what it looks like here. as how it's broken all the way down to this 20. Got down to 27.50. So whether that's going to mean very much or not, we'll have to be able to see, what's going on. Regarding that bonds, just to show you how bearish, 1 second, please. Just to show you how bearish the bonds are, I'll use the notes because that's the easiest one to see. As we just completed a beautiful ABCD here in the Treasury notes just last week, and now we've started to come down. This is just such a negative picture for interest rates. I mean, that might have nothing to do with the stock market at all, but believe me, for the rest of it, it looks very, very interesting. So 877-927-6648.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Technomental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks. We have Rich Anderson of Anderson Capital Management on the line. Rich, how you doing? I hope we have Rich on the line. They said
I'm here.
Hey, how you doing? Rich, what's going on in the worlds of tariffs?
Well, you know, I think that based on some of the relationships in like the oil markets, the spreads are changing, and some of these other markets, something's going to, and the strength in like the Canadian dollar, I think something's going to get worked out on NAFTA. you know, sometimes things end up working out a little bit for our president, in spite of everybody wondering what the heck he is doing. And
well, that I can understand.
Just like at the end of this week, I believe there's a Chinese delegation coming to D.C. to follow up on the guys that were in China a week and a half ago.
Sure. We all have to eat, that's for sure. And Rich, it's going to be 90 degrees in St. Louis today. I mean, holy cow, that is really hot for May. I mean,
yes.
That's like 110 in Tucson. Oh my goodness.
I know.
Now, what's the situation in the supply demand with this? We got a report coming out today, don't we?
We have a World Agriculture Supply and Demand estimates today, and that's at 11 o'clock Central, 12 o'clock Eastern. This will be more confusing than normal because the USDA said they were going to do some adjusting and add some new things to it. When this report comes out, right at 11 o'clock, there's like 80 numbers. So it's virtually impossible to find your number. But on top of that, today they've decided they're going to adding a new line to the World Balance Table for wheat and rice that will show production, use, and ending stocks after subtracting amount from China. Other adjustments include Russia and Ukraine to the USDA's major exporter list. This is just, these are all going to be new lines, and it's going to make things a bit more confusing. We often see a jerk up and then a jerk down, or vice versa, right after the report. It's going to be more like that than ever probably today. I can give you estimates, but the best thing to look at reports is, does the market close higher or lower tonight?
Yeah, I just look at the numbers, as well as I do. I'll tell you, just looking at these charts on corn and wheat and beans, they do not look bearish.
No.
Maybe it could change, but boy, there seems to be a lot of supply coming in here to some of these things. So it just looks very, very interesting anyway. How it works, we'll have to wait and see.
If we have any weather this summer, I mean, look at how much oil has gone up from its lows versus say any of the grains, particularly corn. If we have a weather concern this year because they're shifting a lot, we expect on the report to show that they're shifting acres, continuing to confirm that they're shifting acres to beans and less to corn. And corn could have, in the summer weather concerns, an amazing move.
Rich, on the long-term chart for soybean oil going over the last 3 years, we just made a big Gartley pattern down here at $31 a pound. Yeah, it's pounds in oil, isn't it?
Yes. When you
That's what I thought.
60 pounds of is what a bushel of beans is. You get approximately 11.8 pounds of oil.
Yeah. Anyway, it goes back a long time. I forget what some of these specifications are. I know what the tick value is, but I forget what the contact sizes are. But this long-term chart on the soybean oil certainly has a bullish scenario with a beautiful Gartley pattern over the last year and a half. And from what I understand, they're having problems in weather in India, which would be affected by palm oil and some of the other oils. Is that correct?
Yes, that is correct. And we had problems in Argentina earlier. Right now, the demand for meal has been so strong that they're crushing for meal, and the oil's kind of an afterthought.
Okay.
But eventually, the biodiesel, will kick in to be a supportive factor. And when you have big bull markets in beans, they're led by meal, so that is a good thing. But oil is going to catch, its value down here, and a 10 to 20% move is going to be nothing, I think.
Yeah, that's for sure. When they really go quickly. That's for sure. Rich, what's your feeling on the market for corn? I mean, this is the one that Cy follows really close, and he's extremely bullish in corn. And I just wondered if you're seeing the same thing from a fundamental basis.
If we have trendline yields, I'm friendly. We have to have a bumper crop to not be friendly because of the acreage reductions. And if we have any problems whatsoever, you can see a 25 move, a dollar move in corn this summer. That being said, over the next 2 weeks, we're going to see moisture where we need it. We're going to see drying where we need it to get the stuff planted. And so that might, it's not unusual to see a 2 or 3 week sideways consolidation. And then as we go into the growing period, that's where, it lights up. Corn typically, its highest moisture need is by the second week of July. And so that critical time in June and that through the middle of July, that's when you can have the weather become a major factor.
Okay, that's pretty good. How about the hogs, Rich? The last time you were on, you told us to buy hogs, and they had one heck of a move. You were right on the short side for about 5.5 weeks. They went straight down, and then we've had a pretty good bounce. Are they going to be through this tariff thing? I mean, they have to buy pork and no matter what they do in China, don't they? Because that's one of their largest sources of protein.
Right, and one of our major pork producers is owned by the Chinese, essentially.
That's Smithfield?
Right.
Yeah, okay.
So I believe, they put tariffs on hogs, soybeans, cotton. Well, they only import half the cotton they used to. On the hogs, value, the cash markets, This is the strange thing we've got going on right now. The cash market's $10 under, say, the June board. The cash market for cattle is $15 to $20 over the June board. Normally, the cash will lose and come down to where the futures are in cattle, and typically that'll occur in hogs. But hogs tend to strengthen at this time of the year. It's just we have more protein. I think the next retest of the lows, you get a technical signal, you take it, and you'll see strength into the middle of the summer. And I wouldn't be surprised if that delegation that I think is going to be in D.C. will, filter out news the following week, next week, that might have a little positive to it. But, I'm not involved in any of this. I just hear about these things. And
well, you've got a pretty good source of information, that's for sure. And I know your source of information on weather is pretty good too. Now, Rich, you have any feeling on the sugar market? What do you know about sugar?
I know that the millennials don't use it, and they're probably wise. I think if it retests, I think it's at a value level. It's used for gas, for fuel in certain parts of the world, down in Brazil, and it should catch and have value down level. Technically, still.
Hey, we'll let you go. Hey, thanks a lot, Rich. Thanks for joining us, my friend. We really appreciate it. Rich Anderson, Anderson Capital Management.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Thinkorswim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour, brought to you by Nadex. Next on TFNN.
Okay, we're back, folks. We're going to take a look at this gold market. I posted the chart here of gold, and as you can see here, we hit that 50% retracement. We've been up just about every day this week, and given the fact that the euro did go below 1900, we got all the way down to 118.25. We're now trading at 119.35, so we've reinforced that 1900 support, 119 support in the euro. So this could possibly give legs to the movement in the gold market and also the silver market, because silver was acting very, very bullish, because on the last move that we came down in silver, we talked about this at the beginning of the week. One of the reasons why it looked potential to be bullish this week was the fact that it had hit this exact the exact 78% level from the low we made back in December, and that was basically a perfect trend line from the low in July of the previous year. So this has got a really bullish pattern too. So I don't know if it's going to work or not, but all I do feel strongly about it, there's a very strong relationship between that euro and which is the U.S. dollar, of course, and the gold market. So if this thing starts to move, you could see a really big move here in the gold, but really needs to get above the price of 1335, 1340 to really to scare some shorts, I would think, because they've been in control of it for quite some time. The key fact that it held that 50% level at 1302 is extremely important, and it was doing it at the same time that the silver was holding the exact 78% level. And we need to thank our good friend Mr. Z in the den, because he was certainly yelling and screaming about that when it was going on. So let's just kind of keep in mind that that's what we've got to look at here. So we'll see, how much we're going to be moving on some of these things, but they're certainly having a heck of a good move. At least we've come off the bottom a little bit. I mean, we've only rallied $24 off the bottom in the gold, so it's not a really big deal. So just sort of pay attention to that. Getting back to the Treasury bonds and Treasury notes, folks, people asked the question, well, one person asked the question of the relationship between the stocks and the bonds. Well, there's certainly, because they're traded for money, but, one is related to interest rates, and there are two different types of people that are using those. You got people that are looking for interest rates, and the other people are looking for capital appreciation. So they're really totally different. So you've got to treat them differently. That's why, being a technician, you try to look at the price of what you're dealing with instead of the actual trying to figure out what the fundamentals are, because I have a really hard time on the fundamentals. It's just really pretty tough to get into it. Now, someone's asked a question about the sugar, so since we're talking about that right now, we might as well bring this up and see if I can pull up a chart on the sugar without too much trouble here, because it should be holding here. It's only down about 17 cents from where we bought it, so it's still holding okay. Let's just get it up here. We see we're still setting right at the right at the 61% retracement. Let's get this up here. Hold on one second here and make sure I get it up in here. Yeah, we're okay. Let's get this here so we can take a quick look at it. And you'll see here that we're looking at this thing right here. Right at that 61% retracement. Folks, when you trade the NASDAQ, realize you're trading the equivalent of pork bellies, because that NASDAQ is basically, you're looking at 25 stocks out of 100. And these are the big stocks. These are the big daddy rabbits. You're talking Google, Facebook, all these expensive stocks. And that's why this thing has got so much volatility, both up and down. So just remember that's the way it goes, because sometimes you don't always get the thing that you're looking for. So be careful here when you're trading these, because markets that go straight up have a tendency to come straight down. But we've had a big move in these things this past week in everything. The Dow Jones rallied well over 1,100 points in just the last bottom that we've had here. So it's been a tremendous move that we've seen here. Now the Dow has been the weakest of the three, but today actually the Russell is a little bit weaker than anything else. But if you're going to short anything, short the weakest. Don't short the strongest. That's another thing out of Jesse Livermore's book. And, oh, by the way, I was chatting with John Jameson yesterday, like I always do, and I asked him about his favorite books. And, he brought some of them. I have them all, but some of them I just have to bring to your attention tomorrow, because there's one of them in there with Peter Bernstein, Against the Gods, which is really a great treatise on Fibonacci and sacred geometry and stuff. So I think that's one that's very, very interesting to look at. But we'll go through some of these other books that he really liked. Of course, The Reminiscence of a Stock Operator by Jesse Livermore, which was he was the pen name of Larry Livingston. But anyway, we'll see. It was written by what was the guy's name? I can't remember. Well, let's not worry about that. And the other one that I wanted to talk about was Charles Mackay's book, The Popular Delusion and the Madness of Crowds. That was another one that was really interesting. So those are some of the ones that he talked about. Well, I'll go through all of them with you later on, just so you can get an idea of some of the stuff that he liked when he was doing this, and it's really about that. You're not going to believe this about the publication. You're not going to believe this about the paper. He was ready to do this, and the paper went bankrupt 3 days before the article was supposed to go in there. Can you believe that? I mean, what are the odds of that happening? It was a pretty nice paper in the UK, so I really don't know what the name of it was. But it wasn't the London Times, but it was a pretty good one. But he'll be posting it for us one of these days. But there's a great article, and it was about the weaponization of Bitcoin and cryptocurrencies, because there's so much coming out here on news now, with Warren Buffett coming out this past week. And he and Mr. Munger said that it was equivalent to rat poison, and it pushed the stock down about $800 a share, which is nothing when it's trading at $9,500. But if you look at that Bitcoin chart, it doesn't look bearish anymore, folks. We've been in this tight trading range for 10 days, and with Warren Buffett coming out and saying that he didn't like it, well, that's the understatement of the year. It didn't get hit very hard because other people must like it. That's the bottom line. And remember, what Mr. Buffett says and what Mr. Buffett does is not always the same thing. I've watched him do some of these market things over the years. One of my favorite one was in '96. He came on CNBC, and he was talking about the fact that he owned 15% of all the above ground silver in the world. And the following report for Berkshire Hathaway, he had no silver, and silver went from I think $13 to $7. So this was back when it didn't have wild swings like we're having now. So be careful of what he says, because what he says is not always what he means. And that's true of everyone. So you're the one that has to take the responsibility of what you're doing here, because you're the only one that can take responsibility, folks. Nobody else can take it for you. I know you'd like to think that, but you just can't do it. So just keep that in mind as you're getting ready to look at some of these things. Anyway, but yeah, anybody that eats ice cream all day long can't be all bad. You're absolutely correct. I don't think he's eating vanilla ice cream anymore because vanilla is more precious than the price of silver. It's more than $16 a pound for vanilla. Coming out of Madagascar, 877-927-6648.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and we've got the stock market just as strong as a little rubber duck in water. It is running at Dow Jones is up about 150, I guess, something like that. No, 110. Nasdaq's up 30. S&P's up 11. And the Russell is up 280. It's lagging the market a little bit, but they're still all very, very strong in here. We've got crude oil is now reversed, and it's now down on the day after the, it's a matter of fact, in the middle of you'd think there'd be a war going on, you'd think crude oil would be going nuts, but it's actually held up. It hasn't gone anywhere, given the fact that we've been at this level. We're now at the 78% late retracement of the low several days ago. Getting below this 70-80 level would make it extremely bearish for the crude oil. So let's just see what happens. If you did the crude oil trade for the 24/7, we sold it 2 ticks off the high. Put your stop at break even. You've got well over $1,300 in it now. So you either want to make sure you don't give any of that back in case there's a war over there. you don't want to stand in front of it. Believe me, these things that they talk about are not always what they say they are. So you sort of pay attention to that as you look at it. Okay, that's basically it. Keep an eye on the report today for the grains. We'll have more information on that tomorrow. I'll be checking in with Rich and also with Cy Monley this afternoon to get the bullishness and bearishness, but we'll see that, of course, in the charts, so that should not be too much of a problem to look at. So we'll watch it very, very closely tomorrow as we do this. No guest tomorrow. It's just the old cowboy here in Tucson with a temperature of 101 today. We're hitting the 100-degree mark every day now here in the desert. So the soybean crop is still safe here, but the rest of the crops, the cactus, are still doing well. So you folks have a wonderful day. Live every day in an attitude of gratitude, and may God bless. And we'll see you on the flip side in the morning. 877-927-6648.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.